All right. Well, thanks everyone for joining us this morning. Very honored to have Philipp joining us from Germany. My name is Keenan Olson. I'm one of the community managers for Chainlink. I really want to thank Dr. Philipp Sandner and the Chainlink community for joining us today, and really grateful for your time, Philipp. I know you got a really busy schedule to join us for this presentation and Q&A. Just want to give a brief introduction to Dr. Philipp Sandner. He founded the Frankfurt Business Blockchain Center in 2018, and in 2019, he was ranked one of the top 30 economists by the Frankfurter magazine, a major newspaper in Germany. Further, he belonged to the top 40 under 40, a ranking by the German business magazine Capital. Since 2017, he's been a member of the FinTech Council of the Federal Ministry of Finance in Germany. And the expertise that Professor Sandner includes blockchain technology in general, crypto assets such as Bitcoin and Ethereum, and has been working extensively on the digital programmable euro, which is what we'll really be talking about today. We'll share all the links into the description afterwards, including his most latest written article that kind of spun all this talking with each other and getting very interested. So without further ado, Philipp, if you would like to maybe just introduce yourself briefly, and then I'll let you take it away.
Yeah, thank you very much. My name is Philipp Sandner. Indeed, I'm sitting now in Cologne in Germany. I'm into Bitcoin since 2013. That's now 7 years. And in the beginning, it just was a hobby, not more, as probably with many people out there. Then I became professor at the Frankfurt School of Finance and Management in Frankfurt. That's in the middle of Germany. And there we had the idea that basically as a university where we are focusing on finance, we actually have to have a blockchain center once we have understood that blockchain will change the entire world of finance. That was approximately 4 years ago. That's when we founded a blockchain center. And since then, we are really trying to help build a community in Germany. We are running a couple of projects also in the area of crypto assets. We inspected the energy consumption for a large-scale German utilities company and did a couple of projects with our small team. So we are an applied research institute. That's basically how I best describe ourselves. I now share the screen, right?
Yeah.
So can you see them? Does it work?
Perfect.
Excellent. So today I would like to talk about the digital programmable euro. That's not necessarily the central bank digital currencies, which you might know with the term CBDC. The digital programmable euro is quite strongly related, but it's not the same. And of course, that's very much related to tokenization as well. Therefore, I would also like to talk about that as well. So first of all, yeah, that's a quick introduction slide. As I said, we are a research institute with an applied focus. We have been founded in 2017. We are doing consulting projects, education, of course. We're helping startups, for example, also a couple of startups getting a footprint in Germany or Central Europe. That's Germany, Switzerland, and so on. These countries have a quite strong basis in the area of blockchain and crypto assets. And of course, we are also trying to help the community. We are not government funded, we are privately funded, and you see the companies supporting us here on the lower half. So what is the digital programmable euro? The digital programmable euro can have many forms. You can have it as a CBDC. This would be the central bank, could be the Fed or the ECB, creating the euro and letting it run, or the US dollar, and letting it run on a blockchain network, right? But the digital programmable euro could also be the euro or the US dollar on a blockchain network, but not necessarily issued by the central bank, but it could also be issued by a stablecoin issuer, right? Or by a consortium of banks. And therefore, the CBDC topic is quite supply side oriented towards the central banks, whereas the digital programmable euro topic is strongly related, but it comes more from a demand side, emphasizing on how can the euro be beneficial for future business models. And this is where I would like to now start with in the beginning, asking the question, why do we need it actually? And there are a couple of reasons why a digital programmable euro or call it a crypto euro, call it a stable coin, call it the blockchain euro, whatever. It comes more or less to the same result. Why do we need it? So first of all, we can have cross-border payments. For those of you into blockchain, I think you should know this quite well. That's nothing new for you. It means that you can have end-to-end transactions from me here in Cologne to you in, I don't know, Argentina, end-to-end denoted in euro or US dollar. And these end-to-end transactions happens in a couple of seconds. Then second, we could have automated payments and business processes. This is well known under the term smart contracts in the blockchain language. In the real world, this is payment processes such as loans, factoring, leasing, escrow accounts, and so on. All these processes out there, also those processes which are known from the decentralized finance area, yes, but also those financial services which we all know from the real world. That's, for example, leasing of cars, factoring of machines, and so on. And now comes one of the key points why a digital programmable euro, in my personal opinion, makes sense. We call this integration of delivery versus payment. This means that once you want to consume a service or you would like to consume a good, then a company is delivering this. Yeah, it can be car sharing, it can be selling a good, it can be consuming a video on Netflix, it can be purchasing a share. This is all delivery, and you have, of course, to pay for it. That's delivery versus payment. And right now, for example, in securities trading, when you are purchasing a stock, say the Apple stock, then the Apple stock basically is organized in a silo-based system where all kinds of stocks are managed. And the money is organized by the bank. So you have the bank as a silo and you have the stock exchange as a silo. And these two silos, they have quite some difficulties of being reconciled, such that both are being integrated these days. That's exactly why the finality of a trading of stocks in Europe at least takes 2 days until this entire trading is finally being accounted for, right? The purchase of the stock happens with brokerage services right away within a couple of seconds, but until this entire transaction is absolutely finalized, being done and accounted for, takes in Europe 2 days. And in case you have a blockchain-based system where you have many assets, many tokens on top of it, you have the stock in token form on it, that's a security token, say the Daimler stock or the Apple stock, and you have money in a tokenized form on top of it, then you can have atomic swaps, or you can have trading, you can have purchasing Daimler or Apple stocks happening in a couple of milliseconds. So delivery versus payment, not needing 2 days, but just a couple of seconds. In case one of you guys might have purchased shares of a limited private company, right? You go to the notary, then you're doing the transaction of selling or purchasing 10% of your private limited shares, then this is even more crazy, because this kind of transaction finalizes its settlement sometimes just after 2 months, until it's noted in the commercial register. Or real estate transactions, like with the real estate register, you have to organize many things, then you have to pay for it. Until a real estate transaction is finalized, it very often takes also weeks or months. And with blockchain, this can potentially be speeded up such that delivery versus payment happens in a couple of seconds or milliseconds. And this is one of the key aspects where DLT systems, can be public systems or permission systems, can potentially break down silos by integrating this. This is just possible if you have tokenization of rights and assets. So you would tokenize money, that's the euro, you would tokenize real estate, you would tokenize the car, and I think you can name it. This is pretty well known, but you have to have the regulatory possibility to do so. You have the legal certainty and the technological feasibility such that you can tokenize any right and any asset out there. And where do we need this? In my personal opinion, it's not just about us as human beings with our online banking software. That's not the case. But I feel that one of the key areas where digital euro makes sense is the area of the capital market. That's the early beginnings being seen in DeFi. But in the industrial area, that's, for example, where Germany has a quite strong footprint, is where you have machines, devices, the Internet of Things, and all kinds of cars, sensors, and they will all be connected to the internet very soon. And a part of them, part of these devices might also participate directly in payment transactions. Right now we have, I think, 7.7 billion people on the planet, and estimations are out there that in 5 years, to 2025, that's not too far from now, we will have 20 billion devices connected to the internet. Yeah, so 3 times more devices than human beings on the planet. And of course, a substantial share of these devices might at some point of time also transact directly in payment networks. That's the autonomous car, that's the future of manufacturing, logistics, and so on. And for this machine economy, once it comes, then the digital programmable euro or DLT networks in generally will be essential to run it. And the 6th point here is, I think that's also pretty clear, blockchain networks have a high degree of security. In case the passwords and private keys are stored securely, that's pretty clear, and the system is quite resilient. These points here, 1, 2, 3, 4, 5, 6, they apply for Germany. That's why people are pushing it here, and also for Europe in generally. In China, you can also see another reason why people are pushing towards a Chinese version of their local currency. This is that China would like to raise the importance of their national currency in the world. And I think that they are trying to also leverage technology to simply provide an excellent payment system worldwide to then basically gain a share of the market in terms of the worldwide currency. And in the US, of course, it's the opposite. The US dollar is the world's currency. Look at CoinMarketCap. This is all denoted in USD, right? And of course, the US would like to keep the world's prime currency to be the US dollar. So you have also geopolitical influences going on. But I think Europe and the European Central Bank, they do not have the agenda of making the euro like a world accepted currency in a higher degree. Therefore, what I'm written here in blue and in green, this is not applicable for Europe and Germany. So in Germany, the main driver is how to establish digital business models for the future in the area of machinery, logistics, and so on. And now let's dig a little bit into these business models. Why does it make sense from a European, from a business perspective, from an industrial perspective, and so on? So this is now the footprint of Germany, would be different elsewhere, of course. In Germany, we have a couple of industrial domains which are important for the country, many employees, and so on. And these are, for example, mobility, machinery, sensors, logistics, energy, and you could also ask medical technology. And on in the finance side, of course, with the banks, you have payment, leasing, factoring, securitization, escrow accounts, and so on. And what happens now is that very soon these left domains will be integrated with the right side domains. For example, the DeFi company Centrifuge is working on a small intersection of one industrial domain meeting the financial domain. So, and here's an example. That's not an autonomous car. This is an autonomous truck, right? And this autonomous truck is driving around, let's call it Europe or the US, doesn't matter. And this autonomous truck is transporting goods for a specific fee. So I can ask this truck to transport my parcel, my device, my something from A to B, and then the truck charges me, say, $50 US. And this autonomous truck is not just driving autonomously, but it is also doing accounting autonomously. And it's also receiving and sending money autonomously, right? So it's not just about the mechanics making this car driving autonomously, but it also needs to operate effectively and efficiently in a profitable way. So the profit and loss statement of this car needs to be above zero. Otherwise, it doesn't make sense for the car to drive around. And at some point of time, maybe in 5 years or in 10 years, it then starts to make very much sense to also equip this truck with the possibility to receive money and send money. But as we are in a highly regulated country, it's now in this case Germany or Europe in general, this truck will do its accounting denoted in euro, not in Bitcoin and not in Ethereum. That's exactly why this truck can only start doing accounting autonomously once it's connected to a euro-based DLT network. Could be a CBDC or whatever. So what you see here is basically the intersection of mobility or logistics and payment. That's another example of a decentralized business model. That's a sensor. Imagine that this sensor is recording weather data, humidity data, or whatever, and the sensor is storing this data somewhere, maybe in a decentralized database storage, right? Now somebody comes to the sensor, can be a car or can be also a ministry for environmental protection or something like this. And the car asks the sensor, please send me the current humidity value which you're measuring. And then the sensor says, yes, I can deliver this, this metric, but you first have to pay me 10 euro cent. And if you pay me the euro cent, then I send you the data. Similarly, the Ministry of Environmental Protection could also go to the sensor and tell the sensor, please provide me the entire data feed of last year, 2019, for humidity value on a daily basis. And the sensor says, yes, I can deliver this, costs you 250 euro. Then you pay for the money and then you get the data. So this is basically delivery versus payment, but not by a huge organization, but rather by a small scale, mini tiny business model, which is just a sensor connected to a database and a payment network. So what's happening here? That's sensor integrated with an escrow service, because the sensor would only send the data once the money has arrived and not before this, right? So you see here that these integrations are starting to make very much sense. So industry meeting finance. And that's exactly the point where at this point of time, we are using the euro for payment, and therefore you have to have the euro on a blockchain network. Otherwise, these left side domains cannot meet the finance domains on the right-hand side. So let's talk a little bit, before we talk about CBDCs, let's talk a little bit about tokenization. And here I would like to refer to the people in Liechtenstein who have invented the so-called container model. That's in my mind the best description of how exactly defining what exactly is a token. And here, I think everybody knows this. We had Bitcoin as a cryptocurrency, and then we had the utility tokens based on Ethereum. But what is a utility token? That's nothing else that you have, for example, the token, yes, but inside the token, you, for example, have packaged a software license, right? Yeah, so whoever holds the token can use the software. So you package a traditional right to use the software inside the token, and then you end up with a utility token. And exactly in the same vein, you could also package other things. Bitcoin, by the way, is not packaging anything in its token. Bitcoin is basically self-sufficient. But here you could also take the euro or the US dollar, package it in a token, and then you have the tokenized euro, the stable coin, cash on ledger, blockchain euro, digital programmable euro, and you name it. And in a similar way, you can take a traditional security out there. This exists since decades. You package this in a token, and then you end up in the security with a security token. So what you see here is that existing rights and assets on the left-hand side are packaged into tokens such that they can run on blockchain-based systems. And then you end up with these new fancy terms such as security tokens, utility tokens, and so on. But it's not new. It's just plugging an existing right and asset inside the token. And that's why the best way is to frame a token like a container. It's an empty container, and you can plug something into the container, can be a security, and so on. That's a thought coming from the Liechtenstein Blockchain Act, which is really absolutely fascinating. It's a law framework. How did it evolve? So, and what can you do with it? That's an example now. So you take this diamond, and this diamond should be tokenized, split it in 1,000 pieces, and should be made investable for people around the world. And what the people in Liechtenstein discovered is that at the end of the day, with tokenizing this diamond, it's not about the diamond, it's tokenizing the right of ownership on the diamond, right? So whoever owns the right of ownership owns indirectly the diamond. So it's not about the diamond, it's about the right representing, or which can be plugged into a token. And now you take this right of ownership, plug it into a token, like a container, and now you can take this token, like you can take the container and send it around the world on top of a blockchain network, from me here in Germany to you in Argentina, US, within a couple of seconds, right? We can move the ownership around the world, even though the diamond is as a physical asset in custody, for example, in Liechtenstein. So, and this is basically the beauty of this so-called token container model. You can plug something into this token container, can be the euro, can be a right or anything else. And then you can move it around the world. You can group it into portfolios. You can split it up. You can fractionalize it and so on. And why is this needed now? Because let's now take this real estate object. This real estate object is creating the ownership right and the usage right since hundreds of years, right? Now you take these rights, you package them into tokens, that's the token container model, and suddenly you have the building blocks for the digital economy in the future. You can now do mortgage payments, you can directly connect guarantees and insurances to this real estate object, or you can organize access rights, for example, with industrial or commercial buildings. This would make very much sense. And now please listen, because now it gets important. This only makes sense in a highly regulated country like Germany, Europe, US, and so on. This only makes sense when you have the traditional currency on a blockchain network. Why? Because in B2B context and with companies, payment would not be possibly done in cryptocurrencies, but simply in euro, because the accounting systems are running in euro. So you have to have the euro on a blockchain tokenized. You have to have these rights here in middle in blue in a tokenized way. They all are tokens on a blockchain network, and then they can start interacting. And the same is now working for cars. So take this BMW here, it creates the right of ownership, it creates the usage right, for example, car sharing. You take these rights, you package them into tokens such that you then have the building blocks for the digital economy. That's, for example, leasing business models, car sharing, car rental. You can directly connect insurances to the car. You can split the car into 1,000 pieces and make it investable. That's something like leasing, and you have theft control. And this again makes much more sense when you have these rights on the DLT system and you have also the euro on the same DLT system, because then these tokens, be it the usage right or the euro as payment, they can then start to interact. For example, an automated insurance for 10 miles or 10 kilometers, for example. Or take this art piece, you have the right of ownership, the exhibition right, and the copyright. You put these into tokens, let them run on blockchain-based systems, and then you have created the building blocks for the digital economy. For example, you can sell the art piece by selling the token. You can securitize this art piece, get money for it by securitizing this token. That's similarly like the DeFi aspect of Compound, for example. You can create portfolios of arts. You can split this art piece into 1,000 pieces. You can create insurance solutions, and the transport chain is getting under control such that you know when has been something damaged, for example. And again, you need the euro on a blockchain network. Otherwise, you will not be able to really leverage these new business models. That's why the digital euro makes very much sense. And by the way, that's a small company which is being founded these days. They are doing in Liechtenstein exactly leveraging the legal entity there, such that you can have all kinds of tokens being generated, including equity tokens, and all the examples which are previously being possible in Liechtenstein can be leveraged, for example, by them. And I think these arguments are pretty well known, and the company is not live yet, but will soon be. And then all these things which I have explained would also be possible from an implementation perspective. So now let's talk about types of digital money. So what you see here is on the left-hand side, CBDCs. That's basically the euro or the US dollars issued by a central bank, ECB, for example. The entire chart here, what you are seeing is a depiction of how to structure different types of programmable money. And again, on the left-hand side, you have CBDCs as money being issued by the central bank. And typically, people are talking about retail CBDCs, but the word retail is misleading. Retail means that you have end customers, that could be us as human beings interacting with money, but also companies, public authorities, and so on. So basically, any transactions which we are doing in our corporate life or in our private life is somehow interacting, would at some point of time maybe be interacting with a retail CBDC. The wholesale CBDC is just for the interbanking market. And if central bank employees are talking about CBDC, they very often talk about the wholesale CBDC. But we as let's call it normal human beings, we typically talk about the retail CBDC. So you see here very often that people use same words but mean entirely different things. And the retail CBDC can typically come into three different models. We would have the direct model where I, as Philip, would have an account with the central bank. That's basically just a theoretical construction. There is, I think, no larger central bank which is really exploring this model at this point of time. Therefore, you have the hybrid model and the indirect model. This is basically CBDC architectures where the existing banking system is being maintained. We still keep this. So my bank, which I'm customer of, is still there, and I'm interacting with this bank with my online banking software, for example. But this bank is basically distributing the retail CBDC coming from the ECB or the Fed to me, such as basically a two-tier system. The Chinese system, the DCEP system, which is already live in a couple of cities, is also operating in this. I think it's the hybrid or the indirect model, but definitely not the direct model. Then you have on the right-hand side, you have currency or money issued by unregulated entities. That's, for example, private stable coins backed by currencies, for example, Tether, Stasis, True US dollar, USD coin, and so on. And you have private stable coins backed by crypto assets. That's DAI by MakerDAO Foundation. And on the very right-hand side, you have private stable coins backed by a cryptocurrency basket, by a currency basket. That's the former version of Facebook's Libra as we know it approximately since 1 year. And in the middle, I now left out one aspect. I think this is the most important category for the short term and for the next years. This would be private money, but money issued by a private organization, for example, by a bank. That could be a commercial bank, it could be an e-money institute, and so on. And this could be the JP Morgan coin, which is planned, but it's also the new version of the Libra payment infrastructure, which is allowing multi-currencies in various tokens, not just the basket, but also the constituents of the basket being directly tokenized. That's what I call Libra 2.0. And that it's most probably that basically this category in the middle will be the relevant one in the short term. Similarly, like commercial banks are offering bank accounts to us and online banking. On the short term, it's very likely that consortia, can be a banking consortium, can be Libra, can be anybody else, is in Europe, for example, organizing programmable money in form of an, for example, blockchain euro, but not created by the central bank, but just created the way the banking system is working right now. So this here, let's dig a little bit more into detail here. China, for example, started 2014 with such a system and test this system now with first people receiving their salary on the DCEP network. And with this, for example, also European Central Bank is saying that China is at least 5 years ahead of the ECB. But if you are realistic, I think the distance is a little bit higher. I would argue that China is at least China is 6 to 8 years ahead. So the central bank digital currency issued by the ECB might come to us by 2026 or 2028. So that's quite a while up until this point in time. And here, just to be noted, China is launching its DCEP system probably this year in a wider sense or next year. So there's quite an advancement there in China, which is really fascinating. But this is not necessarily bad, not that you're getting me wrong. And why is this? Because in Western countries such as Germany and also Europe in generally, innovation very often is happening coming from the private sector or partly also in public-private partnerships. And therefore, in Europe, I think we need an initiative from the private sector, for example, a private public partnership where the digital programmable euro is issued way before 2028, way before the ECB would create such a solution. And therefore, the question is, what can the private sector do? The banks, the consortia, and so on, maybe Libra, what can the private sector do to launch solutions for the digital programmable euro much earlier than 2028, for example, could be next year. That's basically where we have been thinking a lot. And that's why we then published an open letter to propose a roadmap towards the digital euro, and was quite fascinating. This open letter received in 1 week more than 200 people signing it from the German industry and so on. And what is inside this open letter? It says that first of all, for the remaining 2020, all relevant people in authorities and also companies should first build knowledge such that everybody can speak to each other with the same language, because knowledge needs to be fostered in decision makers' hierarchical levels, right? In Q2 2021, it would be possible to have an DLT enabling payment API. This would be legacy banking infrastructure directly connected to DLT networks, such that DLT can be leveraged with existing legacy banking infrastructure. This would be sufficient for first early use cases being done by Daimler, Siemens, Bosch, and these companies, as I mentioned previously. And now it gets interesting. By Q4 2022, it would be possible to have an euro token standard being established such that the euro can be issued on various DLT networks. That could be, for example, Libra, but it could also be many other networks. So once this standard is being met, then the euro would be issued on multiple DLT networks. And why is this important? Because only then the euro would be interoperable between these single networks. It doesn't make sense that you have one type of the euro on this network and another type of the euro on another network, because what will be needed is that the euro or the US dollar can be interchangeably being used, interoperably being used between the DLT networks. And that's with all critics of the current infrastructure, but this is what works extremely well. I'm doing a money transfer with my bank account, and wherever I'm sending the money to, the euro arrives there. I don't need to exchange the tokens. I don't need to apply an exchange rate and so on. But the euro payment is interoperable in Germany for 82 million people. That really works. And we need now to really work on a similar standard such that this can also be possible for DLT networks. And then as early as Q1 2024, potentially the European Central Bank could potentially issue a CBDC, but then they really have to start intensifying the efforts from now on. Otherwise, this very tough timeline would not be met. And what is the key message from this timeline very quickly is that the industrial companies can start establishing business models with the digital programmable euro as of next year, because there would be a bridge solution available which allows them to basically use the digital programmable euro, even though it's not the perfectly long-term solution like a CBDC. And now comes the last section of this presentation. We recently have published this paper 2 weeks ago, and here we asked 50 senior experts from central banks, financial organizations, industrial corporations, and so on. We interviewed them about all these topics which we just have discussed. We also interviewed them about Libra and also about the CBDC. And here, for example, I just show you a couple of graphs which we have created. A question which we posed, these 50 experts. You know, these 50 experts, they are extremely credible because they are knowledgeable about blockchain, and at the same time they know payment infrastructure, they know how the industry works, they know how the financial market works, and so on. We try to focus on senior experts which are combining multiple aspects of knowledge. So the first question was, is DLT really the appropriate technology to implement a digital programmable euro, or should it be another technology? And here you see that the majority says yes, DLT is the right technology, 62%, and 20% more are saying not necessarily, and no preference is being given by 18%. And there was not one person who would simply say no. Yeah, so here you see that DLT is a brilliant technology which could easily be used in a meaningful way to support a digital programmable euro. Next question was, do we actually need a digital programmable euro. And here you see that again, the majority said 76% said yes, we need it. And a couple of more said yes, but later, or yes, but only under specific circumstances. And only very few people, 8% said, no, we don't need it. Yeah? So this is also interesting that people who are knowledgeable about this topic really see the importance and also the meaningfulness that it makes sense. When will a Euro CBDC be issued by the ECB? Experts said that like 80% of the experts said that this would happen between 2023 and 2030. Yes, that's a very broad range. We might have split this up into shorter time frames, but you see here, nothing will happen in the short term. And most probably, if you now compute the mean, most probably expectation would be that it happens maybe 2025 or 2026, maybe 2027. And now the same question for Libra. When will Libra or Libra be introduced in the Euro area? People would not assume that this happens this year, even though Libra has announced that they would like to launch this year. But the experts we have asked said that they would expect it for 2021 or 2022. And you see here the numbers, that's 48% or 32%. Yeah, so, and that's interesting because with this, experts expect that Libra is coming a couple of years earlier than the ECB with a potential central bank digital currency. And you know, as people in the blockchain area, how much a couple of years can be. Yeah, we are all fascinated about Ethereum and other platforms, and Ethereum has just an age of 5 years. Yeah, that's massive. So here, with this dynamic speeding up these days, these years between Libra and a CBDC is really, really significant. What are the benefits of Libra, for example? Most of the experts said, even though the clearness wasn't that significant anymore, but people said it's about payment efficiency, yes, financial inclusion, so they bought into this narrative. They also said it's a wake-up call for existing infrastructure providers. It's convenient, programmability, interoperability, and so on. And what are the risks? I think this is also well known. It's abuse of market power, legal aspects and regulation, diminishing power of central banks has been a concern, insufficient consumer protection, data centralization, and so on. Yeah, so we try to lay out the risks and benefits of Libra and also of CBDCs. Yeah, with this, I would like to close this presentation. I think we have a couple of minutes left for a discussion. And if you wish to get more information, please write me an email or contact me with LinkedIn or Twitter or whatever. Yeah, it would be a pleasure in case you have questions. We are doing our best to answer them. I hope now we have a couple of questions for the next 15 minutes.
Awesome. Well, thank you so much, Philip. That was a fascinating presentation. Yeah, so would love to ask you just a few questions that we kind of gathered throughout the community over the past week, and a couple that came into chat. I really found that survey really interesting, and kind of the wake up call of what happens if Libra gets implemented. Do you feel that if something like Libra or maybe a different stable coin were to become mainstream, as well as if maybe even just like a central bank digital currency became mainstream and got implemented, would that be a threat to just fiat currencies in general, and would cash disappear?
That was 3 questions in one, right? It's a very, very, very broad topic. Will physical cash disappear? Well, sooner or later, yes, definitely, but it will take maybe 10 years, maybe 20 years. And if you look at younger people now being at school, studying, these people hardly have cash anymore. And with the aging society, at some point of time, with this pyramid going up, at some point of time, the young people are entering the job market and they are growing up, then we can assume that in 10 or 20 years, we do not need to have physical cash anymore. But of course, we need to keep the values such as privacy and so on consistent. This is, but we should not forget, we are in the very early beginnings of exploring all these topics. there is, except of the large-scale Chinese project, there hasn't been any systems in a broad scale being live. So we are in just a very, very early stage, and therefore very often people have to learn more and become more educated to really also see what is possible with blockchain technology. Of course, Ethereum is transparent or pseudonymous, right? We can see and inspect which address is doing what, but technology has shown that you could also have private transactions, which in case this is needed, right? So therefore, as a physical cash will disappear. Right now, the world's currency is the US dollar. We see that China is having ambitions to increase the importance of their currency. My personal opinion is that we will see like a huge differentiation of currencies. For example, also having other currencies being usable in 5 or 10 years could also be Bitcoin and could be Ethereum. Maybe we have the euro on top of Libra, but maybe we also have the euro as a CBDC from the European Central Bank. And then we have a consortium of this group running the euro, and we have another consortium of another group of companies again running the euro. So it's multiple euros out there. They of course need to be interchangeable. And at some point of time, I think it gets fascinating because technically they are just tokens, right? So then in case this becomes true, then you could basically replace the packaging of this token container. You deplug the euro and you plug something other into this token, right? So therefore, maybe in 10 years, purchasing power is not primarily being bound to national currencies, but maybe also to entirely different forms of currency. Could be loyalty points, corporate money. There are so many possibilities out there, but what I think what we see is a broadening up of how purchasing power is being bound and how it will be used. Whereas nowadays it's primarily, of course, on a worldwide level, the US dollar and of course a couple of other currencies.
Excellent. Do you think this is almost like the new space race, and it's important to be the first currency to get onto a distributed ledger technology? Or is it okay for maybe someone to sit back and kind of weigh the risks? We see that China's creating one, you're working on one in Europe. The United States are working on a digital dollar. Is it important to be the first to market on one of these, or sit back and kind of see what happens?
It's interesting that you're mentioning this because this morning I read a newspaper is the wrong word, but a newsletter, that's the right word, and it was like a German guy who described the world how it is now, and he felt that there is more and more this kind of duopoly emerging. You have the US with Google, Apple, Facebook, and so on, and you have China with Baidu, Tencent, Alibaba, and so on. And you can basically match country by country, category by category. You can match that like a US prime company has a Chinese counterpart, right? But you have two different large-scale ecosystems. And then he said that Europe needs to be careful because we do not have these large-scale digital champions. And therefore, Europe might be in a very difficult position because some people are already saying now that Europe might become a digital colony of potentially the US or China. Nobody knows, right? But therefore, I think, is it a space race, as you said? Maybe yes. China probably is a couple of years ahead. But we know, for example, the US can really change dramatically quickly. If they want to change quickly, then it's absolutely dynamic what's going on there. So I would guess that the US can really speed up dramatically. But can Euro speed up in a similar way to provide a European champion in a similar way? I would doubt it actually, yeah, because otherwise we would have more digital champions than SAP and a couple of other ones which are by far smaller than Apple, Google, and so on. Therefore, is it a space race? Maybe not really yet, but people are waking up and identifying this technological ground as something where you really have to be careful to basically protect your sovereignty, right? I think this is definitely the case.
Interesting. Thanks for that answer. In your opinion, what is your top reason for implementing, if you had to put it down to just one? And can you maybe elaborate a little more about how DLT would fit into banking infrastructure?
Well, on the one hand side, you have the legacy systems, the industrial corporations, and all these companies who haven't not yet done much with technology like blockchain, except of a couple of prototypes, right? So in Germany, we have Daimler, Bosch, Siemens, also Evonik, BASF, and a couple of other large-scale corporations. They all know what blockchain is. They all see some benefits. They all have done a couple of prototypes, but they are struggling with really identifying large-scale business cases for them. So this has not been done yet. Yeah? So what we need to have is real products which make sense for them. That's the next step. And then I see the public blockchain systems, primarily Ethereum, where you can do so much stuff, and you have like endless programmers on the world, you know, like 10,000s of people programming and pushing these topics. And then you have the inspiring DeFi ecosystem. It's large by numbers in relation to the number of people really using it, right? So that's a little bit strange that you have this dynamic going on, even though not too many individuals using it apparently. And I think it will be really exciting when the traditional world is meeting the approaches of Ethereum and programmable money plugged on top of Ethereum. And that's, for example, the company Centrifuge. I think they are sitting in Berlin, but I might be wrong. But the company Centrifuge is trying to bridge off-chain devices with DeFi. Yeah? So for example, why just deploying loans on top of DeFi between individuals? Why not, for example, deploying such a loan for a car sharing company who wants to purchase a fleet of cars, or commercial building activities or machines? Why not routing the money from the DeFi ecosystem off-chain into such off-chain assets? You know, that's difficult because then you have a central gateway. It's not decentralized anymore. But in my mind, it would make very much sense, for example, to finance capital goods by money funneled through DeFi channels into off-chain assets, right? It's dangerous to do, but it's difficult. It's not dangerous, but it's difficult to do, and it involves a couple of IT risks, and it involves a gatekeeper, right? But still, it would be fascinating to do. And I think this is the future when these modern systems are meeting the breadth of the real world. And right now, this would be needed to be done in traditional currencies, US dollar, euro, and so on. But in the future, say in +5 years, +10 years, you know, maybe industrial corporations can then also do their accounting in other currencies than euro. Yeah, maybe they can then do accounting in DAI, who knows? But that's very speculative. And I think if this would be the case, that's a long way. Maybe not 10 years, but rather 20 years.
Yeah, it's definitely growing. I think we've got time for one or two, possibly more questions. Kind of going off your last point, what methods of bringing external data onto these distributed ledger technologies do you see as the most important and working towards within the digital dollar or euro?
That's like referring to the oracles, you know. As far as I know Chainlink, you know, I know it, of course, but I'm not a true Chainlink expert. I think one of the most interesting data feeds are prices coming from the crypto markets fed into oracles to, for example, run decentralized exchanges and so on. That's just financial stuff, and I think that's fascinating, and it works, and it will grow definitely. But I think it's getting fascinating when you are now trying to get off-chain signals into oracles. For example, you have a silo from the chemical area, you know, like a silo from including some kind of chemicals. This silo is basically be there such that another company can consume the chemical, right, for cash. Then you have to have a sensor in the silo, and the sensor at some point of time has to send its data feed towards, for example, a Chainlink oracle, such that on-chain business logic can work with this off-chain sensor measuring how full a silo is, how a machine behaves with its thousands of sensors and so on. So I think what Chainlink is doing now is absolutely fascinating, but in the midterm, it will be very fascinating to also connect like millions of off-chain sensors and off-chain signals, because this will be needed to connect the off-chain world, especially industrial goods and industrial appliances, and for example, connecting this with the financial or the financing power of DeFi. This would be fascinating, but it's maybe 2 or 3 years ahead.
Yeah, thanks. Yeah, it's very, very fascinating bringing the off-chain data on-chain and all the work that you're doing. And I think that wraps up our Q&A. Is there anything else that maybe we left out that you want to add?
I think it was a very, very good questions, definitely. I think the question is what can we do more to basically speed up the development in the off-chain world? You know, what can we do such that legacy companies producing cars, machines, silos, and so on, what can we do such that they are speeding up their ambitions in the blockchain area? Because if they are not ready, then, for example, DeFi, Oracle's on-chain activity cannot supply their power and their financing resources towards these goods in case they are not ready. So it's an educational thing which needs to be solved on behalf of off-chain companies. And I think we need to ask ourselves, what can we do more to basically help these legacy organizations, these industrial organizations, car manufacturers, and so on, to move in a more dynamic way into a blockchain world.
Excellent. If people want to help you, I know that you left your contact information, but what's a way that the audience can help move that mission forward and help you with this?
That's a very nice question. Thank you. So we are currently running 5 projects where we work as consulting or advisors for companies who would like to make the digital programmable euro usable for their machines, silos, and so on, right? And in case somebody is interested in also exploring digital business models in the area of machinery, logistics, or whatever, by leveraging the digital programmable euro, this would be fascinating. And then the second topic is, in case you would like to tokenize assets directly without crazy workarounds of lawyers, just by a 2-page contract, then check out the Liechtenstein blockchain framework. Very soon there is the infrastructure being built such that people can tokenize assets there for annual total costs of $5,000 to $10,000, and then you can tokenize cars, machines, anything else without lawyers sending invoices of 80,000 euro, right? This will be fascinating. This Liechtenstein is around the corner, so therefore, in case you are interested in tokenizing assets at a fair price in a standardized, legal, safe way, let me know. And in case you would like to connect off-chain assets, sensors, industrial goods and stuff to on-chain, can also be DeFi. This is also where we have 2 projects. This could also be very, very helpful. Yeah, and happy to hear from you. There's so much stuff to be done.
Excellent. Well, Dr. Sandner, I really appreciate your time and very grateful to have you on. And thanks for all the work you do. It doesn't go without unsaid. And thank you again for joining, and really appreciate it.
Thank you. Thank you.
All right. Well, that's a wrap for today, everyone. And really appreciate again your time. And we'll see you next time.
Thank you.